Let us learn today about the major differences between fundamental and technical analysis. Fundamental analysis and technical analysis are two primary methods for evaluating and selecting investments. Each approach has distinct principles, timeframes, tools, strengths, and weaknesses. Fundamental analysis focuses on determining an asset's intrinsic value by analyzing underlying financial and economic factors such as revenue, earnings, cash flow, balance sheets, management quality, industry health, and broader economic indicators. Tools and data used are companies' financial statements, economic data, management performance, competitive position, and qualitative metrics. Investment horizon is best suited for long term investments since it assesses a business's potential to create value over time. Strengths in depth understanding of the company and its long term prospects, can identify undervalued securities poised for long term growth, helps in risk mitigation with analysis of business health and qualitative factors. Weaknesses time consuming, data intensive, and can be subjective, less useful for short term market timing. Financial markets can remain irrational, causing mispricings in the short term. Technical analysis analyzes statistical trends from price movements and traded volumes, relying on chart patterns and past market data to forecast future price action, assumes that all fundamental information is already reflected in the price. Tools and data used are price charts, moving averages, support chart resistance levels, momentum indicators, volume patterns. Investment horizon is favored for short term trading, such as day trading or swing trading, because it seeks to capitalize on market trends and volatility. Strengths allows real time trading decisions based on current market activity, typically simpler to execute, visual charts, patterns, useful for setting buy sell timing via clear signals. Weaknesses many may ignore underlying business health on the why behind the price, can generate false signals due to random price noise. Popular indicators can lead to self fulfilling prophecies if many traders use the same signals. Blended approach many investors combine both methods, use fundamental analysis to decide what to buy, identify strong companies, and technical analysis to decide when to buy or sell, identify optimal timing. This approach leverages the comprehensive assessment of fundamentals and the tactical timing of technicals for a well rounded investment strategy. Ultimately, the choice between fundamental and technical analysis depends on your investment style, time horizon, and objectives, with long term investors often leaning on fundamentals and short term traders relying on technicals.